And on the program today, we're taking a look at latest developments, of course, with regards to the petroleum industry. We're looking at latest issues with regards to subsidy, pricing, and, of course, supplies. I'm being joined on the program now by the head oil and gas research, Ecobank Capital, Dolapo Oni. Good morning, Dolapo, and thank you so much for coming in.
Thank you for having me.
So let's start with one question that, a lot of people actually wondered. Usually, January, December is a time we see fuel scarcity. This is March. I mean, it's nowhere near December. So why did we have a scarcity coming in at this time?
Okay, I mean, the finance minister actually cleared the air on that. I think she nailed it, really. The issue there was quite clear. The fuel marketers were owed some areas of subsidy payments, one, and then there was also the issue of disparity between the exchange rates.
Yeah, I know, I mentioned that
Up until
already,
February, the PPPRA was still using 171 for the subsidy calculations, whereas exchange rates, even as at January, had risen to about 200 and something, at some point 205, 206, and these are actual rates that the marketers have had to pay in the markets, but the subsidy was being priced at 171. So that, first of all, discouraged some of them from bringing in a lot of products. And then again, even let's take this a little bit further back. In January, when the price was reduced to 87, now, some of us call that a very bold move because we realized that, look, it's almost not going to be feasible. What's going to happen is subsidy will keep on increasing. And you don't want to be in that situation when your revenues from oil are also declining. So, first of all, there were marketers that had a backlog of old stock that had been picked at refinery gate price of about 88 naira per liter, 90 naira per liter, and they were now being forced to sell at lower price. So the retailers that wanted to buy from them wanted to pick it at 81, 82 in the market.
So the scarcity we're seeing now, was it to get back at the government for making them bring down the price to 87 naira?
So no, I think maybe getting back may not be the right way to say, but I think the idea is that there was an accumulation of issues.
And they needed to recoup their losses.
So, they're making losses on the exchange front, they're being owed areas of subsidy, and then they had losses that they had taken when prices were reduced to 87. So all these issues forced them to think, look, we can't keep on taking these losses. Something has to be done. And so they needed to hold the government ransom.
But you see, these are issues that keep coming up.
Yeah.
So the question is, why do these fundamental issues come up? The Ministry of Finance is aware of, what should be done with regards to paying, the importance of their subsidies, and the PPRA as well. But it always seems as if we have to wait, until there's like a drastic measure. In this case now, they had to ensure that they, held up on supplies, and we didn't get, petrol, and so we started seeing queues here and there. There wasn't any news. There was so many, there was so much static, but there was no news. But why do we always seem to have this fundamental issue?
Yeah, you see, I think, first of all, if we take this back, I think there's a fundamental issue we need to recognize in the downstream sector. And I think it's a bit of a misalignment in the sense that we don't have a free market running that system, okay? And regulation is really never going to be as effective as a market when it comes to making sure that all operations are well aligned, people get the proper pricing, people get the proper quantities of products they need to distribute, people get their payments on time. All those are effectively run by market, and we run a system where it's all regulated because, again, don't forget, the key fuel we consume here is PMS, and the PMS is the regulated one. PMS alone is about 65% of Nigeria's fuel consumption. So that means essentially that, in fact, pretty much the market is regulated because that's the main fuel that is consumed, number one. So that's one issue on one side. The other side of this is the fact that it's not as if the government is waiting on this until there's a problem before they actually pay the marketers, but you have to look at it from the government side also too. There's a revenue issue at play here also. Oil revenues have significantly declined. In the last 7 months alone, Nigeria's revenue has declined like 28%. And I mean, if you really price in just the oil segment alone, that's a major decline. Between next year and this year, we're already forecasting that we might see like a 40% decline in the government's revenue from oil because oil prices are likely to stay around this 50, 60 range for a long time. We forecasted about $56 for 2015. So that's one side. There's a revenue issue on one side. So the government has to manage the revenue it's getting currently, ensuring that it's able to meet all the various capital projects it's running, programs, recurrent expenditure, and also petroleum marketers, So there's that side of things. So that's why you notice that, for instance, there's a backlog of 185. The government has said, okay, you know what, we'll pay 100 currently because we have to manage expenditure at the moment. So that's one side of the whole thing.
So if, for instance, because there have been calls that, petroleum subsidy should actually be removed from the budget totally. Well, already it was about 900 billion. It was dropped down to about 200 billion. And then they're saying, okay, let's take it out totally. What will happen if petroleum subsidy is totally taken out of the budget? Will we see more scarcity?
Yes. Let me assure you, number one is that personally and in our opinion from our research, we believe that the subsidy still has to feature in the budget.
But not as prominently as it is
maybe not
now.
at the same level, but there will still be some subsidies. Because initially we had even forecasted that there shouldn't be any subsidy anymore by the time oil prices get to about 55, But what most of us tend to forget is the fact that as the oil prices fell, Nigeria's exchange rate weakened. So essentially there was a bit of a compensation factor where oil prices fell over 50%, but exchange rates rose about 25%. So that took out some of the impact we should have seen in terms of fuel prices, And then the fact that there are also various other fixed costs in the pricing template used for PMS, which are fixed and don't really change. And most of those are somewhere in the range of about 75 to 77 naira, which typically doesn't change. So no matter what cost the fuel lands, it's still, those will add to it and will make sure that the price doesn't change significantly over 80 naira per bar, 80 naira per liter. So those are costs, those are structural issues that need to be addressed. Until then, we can't take out subsidy.
Okay, so now at the price, at the amount where they're proposing the oil subsidy should be, is that going to be enough?
It's definitely not going to be enough because think about it. When prices were at 97, the subsidy at 97 was somewhere in the region of about 2 naira per liter. Currently, as we speak, we're at 87 naira official pump price for fuel, but the subsidy is over 30 naira per liter. So as we speak currently, the government is having to pay about 1.2 to 1.4 billion naira per day for fuel subsidy. I mean, even at 300 days in a year, you're looking at roughly a bill of about...
And then you're talking about the fact that the government actually has revenue. Well, no, we're actually seeing the revenue on a steady decline.
Exactly.
So where is the money going to come from shocking or absorb this shock that is coming?
So that's why we're looking at, there are two ways the government will have to go about this. Number one is either they raise back the pump price of fuel, which will be a bit difficult because, again, there are various implications for that on economy, on inflation, on the current political campaign area we're seeing. So there will be implications on that. The second part is that the government will have to borrow. Because, the third option is one that cannot happen immediately, and that is full deregulation on the segment. Full deregulation would be very good, and I'm a fan of full deregulation accompanied with adequate domestic refining capacity.
But that can't happen in the short to medium term. And that probably
won't happen in the short to medium term. No. So that makes deregulation a bit ineffective because if deregulation is done and the sector is fully deregulated, first of all, there's a lot of structural disalignment that would need to be sorted out within that same period of time, which will give us a situation similar to something we're seeing in the power sector where a lot of things need to be quickly fixed back, and it takes time to fix those things. So, for instance, if we fully deregulate, it means that marketers have to have enough storage for all the products they bring in for themselves. Because effectively, if I have a storage, it means that I can import all I need, put it in my storage. While some other marketer that doesn't have storage typically would import because he has the import license and you don't have, he can dump in your storage. So there's all this sort of misalignment and segment that will have to be realigned. And then, again, we're exposed to the foreign exchange risk of whatever, if fuel prices in other countries go up, then we're faced with those exchange rates being featured in our own pricing mechanism, and all that sort of needs to be aligned. So domestic refining capacity, deregulation, fantastic.
Let's still talk about that issue you just raised about the disparity between the quantities allocated to maybe specific marketers, for instance, and their actual market share, so that some marketers sometimes actually receive less import allocations and have to source the balance from other marketers. How can this anomaly be addressed so that everybody just seems to be now operating on the same page?
Yeah, but you see, it's a bit difficult also too because, again, it's a process issue in the sense that, for the NMPC and the PPRA to effectively track the quantities that are brought in for subsidy calculations, they have to restrict the list of people that can actually import the fuel. So there's a list of about 32 to about 35 people that typically imports the PMS or the products for Nigeria. PMS essentially. And now, but the thing is this, among that 30, you have the large players like the Totals, the Oandos, the Mobiles, the MRS, the major oil marketers who control roughly about 55% of the market. I mean, Total alone, for instance, controls roughly about 10% of the market. But typically, Total will get an allocation of about 60,000 tons every quarter. That's 240,000 tons in a year. Nigeria consumes 19.5 million tons in a year. For a quarter, I mean, that for someone that controls 10%, that means you control about 1.9 million tons in a year in terms of what you distribute, but you only get an allocation for 240,000 tons in a year. So that means you have to source somewhere in the region of about 1.6, 1.7 million tons from other marketers at a slightly higher price because they have to also make a profit. And then that profit, that higher price you have gotten, you are unable to transfer it to your customers. So you have to take that loss. You have to take that lower profit margin. Again, don't forget this is a fixed price regime where your profits are already fixed for subsidy calculations to be effective.
So that talk about, the regulation begins to, hammer now more than ever for it to come in.
Exactly. So for those sort of marketers, the regulation will be fantastic because effective, what it means is that they're able to source all they need for their distribution. Okay, and for them it also makes sense to expand their retail outlets, and that's why if you look, we're seeing Total expanding its retail outlets, they're remodeling, they're expanding, they plan to spend about 5 billion naira over the next 2 years. Connor is doing similar. Oando is, I think it's still in between deciding to leave the downstream market or not, but they're still expanding their retail outlets. So for those sort of marketers, because they have significant market share, expanding their market share makes sense, and at the same time, deregulation also fits in perfectly into their strategy.